But here on the read with today's inflation numbers and all things economy, Kingsview Asset Management CIO Scott Martin and Strategic Wealth Partners investment strategist Luke Lloyd. Scott, I want to start with you. Look, the White House is taking a victory lap. I get it. Inflation has come down. But having said that, before we peaked at 9.1%, there was a previous month where it had ticked down a little bit and then it went higher. Might not do that because fuel prices have come down, but there's still problems in this report. Scott, housing costs are up substantially. Food costs continue to rise. These are things that Americans, every average American has to deal with, and the pain at the pump has not gone away completely. So this report is better, but we are not there yet.
We aren't. And that's the thing, Jackie. I think we still have a ways to go with some of the Fed's help, too, with a couple more interest rate hikes coming down the pike. And that's, I guess, the difference with some of the other kind of recent spikes we've seen in inflation is now you have the Fed fully on board, tightening and reducing demand. So, look, I think the idea here, though, is the market kind of knows. I mean, we're obviously seeing a big rally today. The market knows where inflation's going, and it's topping out, and then it's going to turn over. So, at least so far, I think with regards to some of the pricing pressures that you mentioned, yes, they are relieving, but still food and housing very, very troublesome for the average consumer.
Luke, let me ask you this. Do you think that the market is rallying today because it's reading this inflation number saying this is good news? Investors continue to see these numbers declining. The White House is on the right path. Or is this one of those moments where investors are looking at the Fed and they're looking towards September and Jerome Powell and saying he's probably not going to tighten as aggressively? Maybe it's not 75 basis points. Maybe it's half a point. And investors and the stock market, they cheer for that.
I think everybody that says this 8.5% number is good is completely off their rockers, including the stock market. I mean, the Fed is completely failing at one of their mandates, and that mandate is price stability. No matter what the headlines are coming in at, who cares that CPI data came in 0.2% lower than it was expected? I mean, Wall Street cheered, and I think it's going to be temporary, but while Wall Street cheers, Main Street, who is the driving force of the economy, now needs 2 jobs instead of 1 to pay for their lifestyle because of this 8% inflation. You know, people having 2 jobs is one of the reasons that the job report was so good last week, which 2 jobs doesn't sound that good to me. And honestly, I don't think it's sustainable through this current environment. I mean, look, labor costs are rising at the same time that productivity is the lowest we've ever seen. You know, any smart business owner isn't hiring another employee for more money when productivity of employees is essentially negative. Here's what I think is going to happen. Inflation will come down eventually, but I think you're going to see an inverse relationship with unemployment and inflation. As inflation comes down, unemployment will rise, so the Fed will be trading one failing mandate for another.
And that is what concerns me. I always try to look at the fundamentals as a student of the market. I look at the core CPI number, Scott, as well, 5.9% year over year. Usually the White House loves to strip out food and energy. Look at the core number. The core number really wasn't that impressive this go around. And what's happening here with respect to fuel prices, for example, is demand destruction. Speculators are trading the price of oil lower because they anticipate that we're in a recession, moving deeper into a recession, and there will be less demand. That, to me, is sort of like the wrong reason to cheer the price going down, right?
Well, in one way or another, yes, Jackie, but we did need demand to destruct a little bit just because demand was very high, driving up prices and therefore crushing supply as well. So I guess to get prices down, we need to get there a few ways, but demand destruction was one of them. But I think this is going to be a shallow recession. We're already in a recession. We've seen 2 negative quarters of GDP growth. I think Q3 is going to be flat to maybe slightly up. Q4 should be a good bounce back. So at least we got kind of the recession out of the way. We got the demand destructed, but still going forward, we got to unkink the supply chains because that's going to be the next driver of price, especially as demand falls off here.
Luke, what do you think about the spending bills that we've seen? The CHIPS bill, $230 billion, $740 billion, likely to pass the House. The so-called Inflation Reduction Act. Many actually say that's going to contribute to inflation and that the next 2 years could be really tough. So those thinking that we're on a steady decline here may have another thing coming to them when you get this surge of stimulus into the economy.
The government doesn't have a spending problem. The government has, or doesn't have a revenue problem. It has a spending problem, absolutely. I mean, the thing is they completely spend all of our money and don't think twice about it. The more sugar they give, the harder it will be to cut back on that sugar. And sugar is very addicting, especially these politicians who are very power hungry. I mean, the craziest part to me, outside of the ridiculous spending in the Inflation Reduction Act, which isn't going to reduce inflation, it's probably going to increase inflation, is the hiring of over 80,000 IRS employees. I mean, the government isn't isn't coming after billionaires and millionaires. They are absolutely coming after middle-class America. I mean, the Elon Musk of the world can hire the best tax attorneys to pay the lowest amount of taxes possible legally. You know, the Main Street, middle-class American can't do that. So I think the government's completely overstepping their boundaries right now. I mean, just think about all the Venmo transactions that people do, all the PayPal transactions that people do, that people kind of don't have too much oversight on. They're going after those kind of transactions.
Yeah, that's definitely a valid point to make. We had economist Mark Zandi on yesterday. He said, well, the Fed has the tools. The administration doesn't have the tools to reduce inflation. And I didn't have time to go there with him, but the counter argument to that is absolutely. They have one big tool: stop spending. Scott, Luke, we're going to have to leave it there. Thank you.